10/16/21 S&P 500 index. You want to talk about a nice bull? Well, there it is. Let me explain something to you. When the S&P 500 had broken that 100-day moving average, that was significant. But what was more significant is when you broke the 50-day. And once again, as a master of trading the S&P 500 index, calls, puts, going up, down, doesn't matter, is that the rally had failed when we called the top was in. And we tested and we came up and we broke below the 100-day. We broke all chart. That 50-day was resistance. 3 days couldn't get above it, laterally coming back down, up. So the thing about it is, at this point, but let me just caution everybody, we're in earnings season. And the next 3 weeks can be very brutal on an individual stock basis. I am telling you, if you are not a professional and understand, if you're holding stocks, it's not about how much they can go up. It's about how much they can go down. If you want to start trading a $100,000 funded account, no deposit required, ever. No capital deposit. Start your trading career risk-free. Have an account funded with 100K. We have the live trading room. We have the coaching. We have everything. If you need it, you can get it. You can work on your own. You will have it. We'll give you a list of stocks to trade, and that will be the test that we give you, and you pass the test, and now you're funded immediately. State-of-the-art trading app, state-of-the-art everything. We have a 2-day buy signal on the S&P 500, and that we do. We were in that deep daily sell signal throughout the 5% pullback that the S&P 500 had. It hadn't had a 5% pullback in 226 days. So it wasn't a correction, because it was not. 10%, 15%, that's when you start getting into corrections. But I will caution every time, when you gap above key moving averages, you gap above the 100 and these other moving averages, and then you gap above it. They did not buy the market and go through resistance. That was resistance. It gapped above the 50 on Friday morning, which is extremely good for a change back into that bull trend. And that bull trend is here. We know when they're here because we said they were here 2 days ago and that the bull was coming back. And now, 3 weeks, we have earnings season, hardcore. And all of these companies in the S&P 500, all 500 of them, are going to report quarterly results. That volatility is going to get big. But it's been my experience as a technical analyst now, is that when you gap above the moving averages, they have a way of coming back down below them. Now, we'll let you know when that happens, and that would be back in filling. When indexes back in fill, they hit support where old resistance was, like right here. That would be healthy. We pull back to that trend line right there and then bounce and off to make new highs. Now, it's still the calendar month of October with the earnings. And October, be cautionary. It can get volatile, and it can. We did have a 5% pullback in this index. Okay? But once again, we have everything that a bull index would want, again, in the S&P 500, and that we do. The only thing about it is what the gaps is in the short term, the S&P is going to get a little bit overbought, which is big, which is quite a different than being oversold -14 to being overbought. You can get into overbought areas on that amount of movement up, just as the same way you can get oversold. It works both ways, my friends. Once again, start your trading career with us. We'll give you 100 funded, oh yes, 100K funded trading account. Let's get busy. Join us now. Call us at 702-685-0772.